All right, guys, we got a good one again. We're looking at this article here, and then I came across our good old friend, Mr. Grant Cardone, coming out and throwing his weight around. You know, the big investor, the economist. You know, again, I don't know what he's worth. I'm not going to sit here and discredit the fact that he's probably been successful. But when people start to kind of go out of their lane and they're starting to try to predict, you know, a correction. One, that's not really, you know, a big deal because markets go up and down all the time. It's really about supply and demand. It's about how the Fed is raising the Fed's fund rate on inflation, balancing jobs, geopolitical news. So that stuff right there is indicators, right? That's what economists use to see if things are going to change, right? So, you know, with this data, it does have some limitations. Grant Cardone likes to be out there in the news and put himself out there. There's a lot of economists out there. I wouldn't call him an economist, but he likes to predict a lot of things that goes on. And I'm going to just say that with him, he has a lot of different things that he puts out. I think it's for clicks. I think it's just for stuff out there that he goes in and he's trying to be smarter than the room and say, guys, always, you know, work with me, work with me. So I'm going to listen to what Grant Cardone had to say. He has another gentleman talking about a great correction happening in 2026 for housing, and then I'll come back and give you guys my opinion on this.
Real estate will be the #1 category by the year 2026 for all age groups. I'll buy you dinner anywhere you want if this doesn't happen. We're going to have the biggest real estate correction we've ever had here in the next 12 months. It'll be monster, and it will hit Gen Zs in a way that they'll never touch that asset class again. I think the reason they lean toward it is very simple, easy to leverage, it cash flows, it's an inflation hedge, it protects yourself against inflation, it benefits from rent increases, and it provides cash flow that people have to have today.
I gotta tell you, bro, that's one of the most astute things that I've ever heard come out of your mouth, and I actually feel exactly the same way. We are seeing products staying on the market much longer, so we are going to see this massive correction. I don't think we're going to see a correction like the great financial crisis in 2008, but I really, really see this coming, and what you need to be doing is you need to be gaining as much knowledge as you possibly can.
So you heard that quick video, right? And they come out, and this is just a short clip, but it's like, look, how many times do people come out and say, this is going to happen? Well, look, markets are supposed to go up and down. That's why when you're dealing with a debt-based society, inflation, and you have a government manipulating how people, you know, spend money by how the costs are on lending, short-term bond, you know, all these things with the Fed's fund rate and how they change that, of course, you're going to have ups and downs. It's almost like predicting, you know, people are going to be more in the market, right, to buy a house if the rates come down by the Fed or the Fed reduces the Fed's fund rate, which ultimately, hopefully, brings down mortgage rates. So if mortgage rates come down, all of a sudden people are going to get into the market and buy. Well, of course they are. You know, all these things that people come out and try to say that I agree, this is going to happen. Great. It's not like it hasn't happened before. The thing is your life going to change because of it, right? Are you going to be able to still buy a home at the price that they were at? Because the cost of living, you have to put in consideration now, and inflation costs going into it, and then housing inflation. You know, all these affordable housing and all these things, a lot of people think they missed the boat, you know. I think housing right now, shelter is always a premium. You have investors, big investors, that use this as a shield or a shelter to hedge against inflation. So when you're talking about the average person out there, or let's say family out there trying to buy a house, is it going to be any better for them? Not really, because housing has already gone up. Now, unless there's something unforeseen that we all don't know about, like what happened in the financial crisis, right? When 2008, 7 and 8, when things started to go sideways and banks almost, you know, basically imploded. Yeah, that was a big fallout that really reset the market. But there's nothing I see right now resetting the market. People have low rates. A lot of people don't want to overspend for a house. They're very picky. So Great. You predicted the fact that prices might come down on homes. That doesn't change the fact that people and Americans are struggling. There's a separation of wealth that's greater every day because we're not looking at the fact that our inflation and our cost of living keeps going up. And part of that is housing. And until that's fixed, we're going to constantly have this issue. And it may be a bigger issue, a continuous issue that we cannot overcome in the future. And you're right, Gen Zs may just be, on the outside looking in going, I may never buy a house. If you guys have any questions on Grant Cardone and his predictions and what I think is, again, we don't know. He doesn't know. I think he's just basing this off of consumer confidence and some data, but that doesn't back anything. And obviously, if you do look at the corrections side of it, we've had corrections, all the time. These things happen all the time. That's part of the housing market and a part of how our economy works. So any questions, let me know. I'm Dan French. I'll see you guys at the next one. I'm out of here.